Welcome everyone to the Hashrate podcast. I am the Bitcoin Broski, and today I've got a very special guest. I am excited to have this gentleman back on the show. We've spoken before, but recently he and his team put together a very comprehensive report on the state of mining, if you will, for Fidelity. And of course, I'm referring to Sam Doctor from BitOoda. Sam, welcome back to the show, man.
Thanks for having me. It's always a pleasure.
Hey, the pleasure is mine. So it doesn't seem like we spoke that long ago. However, you guys have been busy, and I wanted us to be able to chat about this Fidelity report. So let's hear it, man. What led to the journey of creating such a comprehensive report?
Yeah, so we've been interested in mining now for the last several years. I think the first piece on mining that I did was, I want to say close to 3 years ago. But we've spent a lot of time building relationships with miners, both in North America, as well as in Europe and in Asia. And the goal that we set out to answer was, what is the cost of power and where is mining capacity distributed globally? So I think that was the first question we wanted to answer, because there's been a lot of speculation and there's been some good research that's out there that talks about what they think the cost of power is, or and where it's distributed.
So in that vein, though, I mean, I feel like from our side of things, and at Hashrate, we have a newsletter and we have a team that does research. It's hard to drill down on the exact data when it comes to that. Did you guys find that to be a challenge as well?
Oh, absolutely. It's definitely a challenge to get all the information that we need. But, as we build relationships with miners over the last few years, I think we've developed some degree of trust where we say to them, look, if you share this with us, it's not going to go out in any capacity other than aggregated. So, it's not going to go, the cost of power is such a critical piece of every miner's operations that,
Right.
they don't really want to share that information. They don't want that information getting out there. At the same time, most miners would like to know themselves where they stand compared with other miners in the space. And so, to the extent that we have built a degree of trust with miners, they're okay sharing some information with us. For example, they'll say our cost of power is between 3 and 4 cents, or our cost of power is under 2 cents, right? They may not give the exact number, but that gives us some idea as we aggregate it. And they trust that all we're going to publish is aggregated data. The underlying individual miner's information isn't going to go out there to anybody.
Why do you think it is that people are so guarded when it comes to that information? I mean, the competition is the competition, right? It's not like if someone hears that one operation is doing things in X way that, that's going to influence the way that they're doing them, with regards to their PPA or the power price that they're getting. So why do you think the information is so guarded? Why are people so tight-lipped with it?
I think there's probably a few different reasons. I think to some extent, it's that very often the power purchase agreement that they might have might be lower than other entities within that same geography. And some of it is because of, their willingness to shut down as needed, or, it's excess hydro capacity that would otherwise essentially be water over, over the spillway without generating power. So the marginal cost of production is low. The issue, though, is that there are existing customers that are non-miners that may be paying a different price. And so I think that's probably one part of it. The other is if you think about the risk in the event that the price of Bitcoin fell sharply, we saw that happen in March, and we saw hash rate drop in response. The reason that can happen is because if you have a higher power price, it's going to become uneconomical to mine. And that's, so the question is, who is most vulnerable to that, right? And if you know each miner's cost of power, you as an individual miner can figure out where the pain points are and where you stand relative to that. That's great information to have in aggregate, but not something that the miner wants to be known to contribute to.
Sure. Interesting. So you guys overcame that hurdle, and you're obviously, through these relationships, you're able to compile the data that you need for your report. How long did this take, getting everything together and writing the report?
I think the data gathering phase of it was probably two phases. One is just getting to know people and getting them to trust you, and that's
Hmm.
probably a couple of years in the making. And then the actual data gathering was over 3 months.
So now in this process, what did you find as the most surprising bit of information that you were able to compile?
Um, what I was really surprised by, I think, was the amount of capacity that we could identify in in a couple of geographies that were sub 1 cent power. And we've heard about 1 cent for China's hydro season, but we're
Hmm.
talking about some sub-cent power that's not in China, and that was surprising to me.
So which were those regions that you found the sub 1 cent power, if not China?
Uh, I would say that, well, I can't disclose those exactly. I would say that
Let's
I
just
would.
say, are they North America, South America, Texas, or
So let's. So I would say that the ones that we've identified in our report are not in North America. We're talking about Central Asia as well as
Mm,
to some degree South America.
okay,
Um, but that's much smaller. South America is much smaller. As far as Texas is concerned, I know that there's a number of players playing in that market that
sure,
are looking at getting subsidies from ERCOT for the flexibility to shut down their load, demand response or whatever you call it.
right.
I think that doesn't change the underlying cost of power. It just ends up being a subsidy that reduces your overall operating cost. So we have not included that in sub 1 cent power.
That's interesting. So that's, and I think layer one is the big example of being able to feed power back into ERCOT and capitalize on that.
Mm-hmm.
It's interesting that you're saying that that's not it's not being factored in, and it makes sense, right? It's not actually decreasing their overall cost per kilowatt hour or their price of power. It's just in a way to subsidize it. So that's interesting that you haven't included that. When you mentioned South America, were you able to get any data points in Venezuela? Were there, and maybe you can share that, maybe you can't, but I'm fascinated right now by what's going on down there, considering there was the recent government takeover. So did you have access to information there, or was it miners elsewhere, let's say?
I would say that we spoke with a couple of people who are suppliers of equipment into Venezuela.
Okay,
So I wouldn't necessarily know specifics of how the equipment is distributed, but we do have an idea about the size, the volume of that equipment. So that
interesting.
gives us a sense of, roughly how much capacity there is that we could account for, which I think is a small part of what the overall market is.
Sure, sure. And the reporting that you guys did on the distribution of hash rate, as far as which country continent has the most, I think was something that stood out very much to people. So what was the percentage that you guys had China at in your report?
We think it's about 50%.
Which is from the last, let's say, air quotes, respectable report that was submitted. And those people are respectable. I'm not, I don't necessarily want to, put any two reports in the same class when it comes to this. They had put it at about 65. So do you feel like that was just skewed data, or have we seen a better distribution of hash rate since that last report that came out about 7 or 8 months ago? I guess it was the end of 2019 that
Yeah,
that report came out.
I mean, I've seen that report and I thought that it was definitely a high quality report. We
Mm-hmm.
have to understand that the degree of information that is available, in China can be less than it is in
Yes.
other markets. So, for example, we tracked down, I think 80 to 90% of power capacity in North America or in Iceland, and we think it
Mm-hmm.
was only about 15% of China. And that's based on our conversations with the people who responded to our questions. Um, as a result, the degree of uncertainty in China is high. I know that one of the constraints that report mentioned was that their data sources tended to skew more towards China.
Mm.
And so they're,
Yes.
and our data sources tend to skew a little bit away from China. So I don't know that, I would say that we're probably both in the same ballpark, and that's more important than a few percentage points here or there.
Yeah, the exact numbers.
Yeah.
And I mean, and obviously I think at this point it's a best guess, right?
Yes,
You know,
exactly.
you're able to pull a lot of information from other markets because, it's all directly connected to someone's phone or connected to their computers or their iPads, or there's a way to track information and extrapolate it in real time or with a higher degree of accuracy. And in this case, it's still very similar to how it was, 20 or 30 years ago. If you wanted to compile a report or do a consensus or anything like that, you've got to actually depend on people and depend on sources. So I know I said I was going to ask you this before, and I want to get more into the report, but this is just, looking back on it now, taking the whole report in, what's one thing that you wish you could have done differently, or something that, in future reports you may adjust the way that you're gathering data to make sure it's reported in a different fashion?
I think that's a great question. I think that a couple of things that we would love to do a little bit more in depth. I don't know necessarily differently, but more in depth is really understand the mining landscape in China.
Mm.
And the fact that we got some information, but certainly far less than we did in other markets. I think that's something that we keep in mind and continue to build out this relationship. So hopefully over time, being able to speak with people representing 15% of China, that grows to 20, 25% and so on. So that improves the accuracy of what we're doing.
Sure. Or I guess all the hash rate could just come here and then there wouldn't be anyone to no. So what has this report done for you guys as a company? I mean, obviously the affiliation with Fidelity is huge, and I know you had a long-standing relationship with them prior to this report, which is my guess why they tapped you to provide it and to make that for them. But what has the report done for business since it's come out? I guess it's been about a month now.
Yeah, it has. It came out on July 15th. And, I think that we've had a lot of positive feedback on it. A couple of miners pushed back slightly, saying that they thought the median cost of power was more like 3.5 cents or so, between 3.5 and 4. Our findings were that it's about 3 cents.
Mm.
But I think we're in the same ballpark, maybe a little bit here or there. Ultimately, this is our best guess based on the research that we've done, and I think that that's something we just keep working on and keep talking to more people, and hopefully some of the miners who said that their cost of power is higher speak with us, and then we can incorporate that information into the next report.
We've been doing some research of our own we're working on a couple of projects that are requiring some minor outreach, and we've been gathering similar data on, price points. I mean, it's definitely clear that price points are a bit higher in the United States, depending on where you look. Yeah. 3 to 3.5 cents. God bless. I hope those people do very well. That's not the number that we're coming across a lot. It seems for us to be more in the 5 to 6 cents range for a lot of the people that we're speaking to. Now, whether that's posturing or their cost or what they're providing to us or whatever the case may be, North American prices, and I guess more specifically, prices in the US seem to be along those lines. There's definitely cheaper places in Canada. There's cheaper places in Texas and in New York. But yeah, it's been very interesting. There's definitely much cheaper prices elsewhere, Kazakhstan, Russia, places in China. But, of course, you have the geopolitical risks. And you guys are dealing with a lot of people. What do you think, or how do you feel the risk appetite is when it comes to institutions or larger investors in the States when they're looking to place equipment or set up a facility? Is it a bit too risk on for them to go abroad? Do they take the hit on power and pay a little bit more to stay close to home?
Yeah, I think that's right. I think when you're talking about institutions, they really do want to find people within North America, maybe Iceland or, but I would say that most of their investments are focused in these markets
Now,
because.
conversely, oh, go ahead.
Oh, go ahead.
No, I was going to say, conversely, do you think there's really that risk? I mean, it seems like a lot of the facilities in, I mean, Kazakhstan, Russia specifically, and I think of a Bit River, they're actually quite good, right? They're not unsafe, or I guess is a way to put it. Is there, I mean, is there the potential for a perception change, or is it just, I don't know. Like, to me, that seems almost like the bigger barrier.
Yeah, I don't know that it is so much, a risk factor on the ground as much as it is perception. And, this a lot of questions that maybe an investor in the US might have is if you're hosting a facility in, say, Kazakhstan, who else might be hosting over there? And ultimately,
Mm,
if you're all part of a pool that then starts allocating out, coins, the question does, I think there are probably some concerns about who else might be in there and whether you might run into some regulatory concerns that those are questions that I think a lot of institutions don't want to go near.
So we've seen the rise in KYT, right? Know your transaction is becoming bigger and bigger, and I think that's part of the reason why more institutions are looking to mine their Bitcoin or buy virgin Bitcoin at a premium. But it's interesting that you say that there's the added risk of potentially who you mine next to or who you pool with. I hadn't thought about that before. Um, Obviously there's people that are doing illegal things that also happen to be mining cryptocurrency in various places in the world. But I'd never thought about the institutional risk of potentially being in the same facility as one or commingling with those in a pool. Very interesting point. I mean, how does that get policed?
It's hard to do. The question is, I think is just that if you're a financial institution that's regulated and has a reputation
Mm-hmm.
you want to maintain, you don't want to take a chance
Sure.
and get into trouble down the road, right? And I think that's part of the reason why you have people who are willing to pay premium for virgin Bitcoin, or therefore for this by the same token willing to pay a premium to mine in North America.
So, and somebody asked me this the other day, and that was, my answer was the same as yours, right? Like if I'm an institution and I have to know that the Bitcoin that I'm getting is quote unquote clean, then it makes sense to mine, and it makes sense to, buy at a premium if I want to go that route. A question that they then asked me, which I'm going to pose to you, maybe you know, maybe you don't, maybe you have a thought on it, maybe you don't. Okay, so let's say there's something with a bad transaction history, right? Bitcoin that can't pass KYT. Is it in effect no good?
That's a great question, and I don't think that anybody really has a good answer for that. If you think about what transactions look like in the real world, if you're JP Morgan
Mm-hmm.
and you're transferring, US dollars or receiving a payment in, say, Bangladesh, for example, as part of an export order that your customer in New York has placed with a garment manufacturer there, for example,
Mm-hmm.
the you are trusting your counterparty, the bank in Bangladesh, that they have vetted their customers, right? And so essentially JP Morgan's exposure lies in vetting their counterparty, and once they vetted them sufficiently, the the onus of vetting that ultimate party in Bangladesh falls on the Bangladeshi bank. With Bitcoin, the difference is that you can track the history of that token all the way back to when it was first mined,
Right.
right? And so if for example it passed through a sanctioned entity along the way, you can find it. You can see that in the record. The question is, how many steps does it need to be removed from that entity before you think that this token is clean enough for a regulated entity to handle? And you know and I don't know what the right answer is. in the example I gave about the garment manufacturer, it's essentially two, because the Bangladeshi bank becomes your intermediary that essentially to you says this currency is scrubbed, it's clean.
Mhm. Wow. Well, if anybody's listening and they're worried about their Bitcoin's transaction history, I'd gladly take it off your hands, like a 40% discount. I'm sure we can figure something out. That's wild to me. Imagine if you could trace cash back in the same way. And if there was any kind of illegal activity with it, you just had to take it out of circulation. Might actually solve America's problem right now. That might help. How do you view this? So, I mean, we talked about this before. I'm in Europe. You're in the States. You're a much more sound financial mind than I am. You have a ton of experience in this. As you're watching what's going on with our government right now and the stimulus packages and extreme printing of money, what's going on in your mind? What are you thinking?
That's a really tough question to answer. I mean, honestly, clearly the economy needs stimulus,
Mm-hmm.
right? And I think that there are a lot of businesses that are in trouble because they have been asked to close, or even as they've reopened at a fraction of the sort of pre-COVID revenue that they had. So I think that the economy is in trouble, and without stimulus, we could end up in a depression. So the question is really, first of all, what is the right stimulus, and what happens once we get through this with all of the added debt that's been loaded on, right? And is that, to what extent is that going to be inflationary? We've certainly heard that it should be inflationary, and that's an argument made during the great financial crisis as well. And we
Mm-hmm.
haven't seen inflation, at least not relative to other currencies. So the question is really that if every currency is inflating at more or less the same pace, then relative to each other, they're not really inflating, right? You might see that though in terms of Bitcoin or in terms of gold, right? So if you think about it, it now takes more USD to buy gold than it did 6 months ago.
Mm-hmm.
Maybe that's one way to think about it, because you don't see that necessarily in that it takes a lot more USD to buy euros, but it takes more euros to buy gold, right? It takes more euros to buy Bitcoin. So maybe if you think about them as potential inflation hedges, that's where you're seeing the effect of stimulus.
Here, our local currency exchange desk, they've stopped taking dollars. So like I mean, obviously I moved here and had to bring enough to, get a bank account set up and all of that fun stuff. And we went to the same place for years because just the great exchange rate. And this time we went in and they were like, look, this is going to be one of the last times that we can change dollars for you. And I asked him, like, why? I mean, that doesn't make any sense. He's like, well, I mean, why trade them at this point? There's no sense in us taking them. We're not going to be able to get the return on them that we normally would. It doesn't make sense for us to bring them in, from a business point of view. To me, that's super scary. Like being an American in a different country, you always kind of, I guess, take for granted that, hey, my country is the world superpower and we're always going to have the ability to, our money's going to be good everywhere. And it's very weird to think that we could be a couple of direct decisions, one way or the other, away from a complete shift in the way that the world is headed. It's interesting to me as we think about it. I guess, good for Bitcoin, but scary as hell to be living through.
Yeah, no, I agree with you about that, certainly. I think for the last several years, both Europe and China have had, they've made pushes to have their contracts denominated in either euros or in renminbi. And that includes one of the biggest expenses, which is oil, right? So if you can denominate your oil contracts in renminbi, then that certainly moves some of the global demand away from USD. And I think that seeing the magnitude of debt escalation in the US, I think that those kinds of trends might accelerate. As an American, I certainly hope that your experience with the money changer was an aberration.
Oh, me too. Me too. I hope as I watch a lot of my friends look to leave, look to move, as a lot of my family is looking to move. You see everything that's going on in the States. It can be tough to find positive in everything that's going on. But still, there's just this part that holds out hope, right? Like you want to see it all get better. But not to get too far down that political rabbit hole. One of the things that I wanted us to talk about is we have seen over the past couple of weeks, and really I think more so the last 10 days or so, a pretty big spike in the Bitcoin, transaction percentage on each block. And I know you guys have a pretty, we'll call it nifty because I can't think of another word right now, but your transaction fee swaps are something that's very innovative. And I know that you've worked closely with some others to perfect those and make those a good product for people. How are those playing out right now? Are you seeing any increase in demand over this time for those transaction fee swaps?
I think the interest is certainly growing. I think that on the one hand, miners are they benefit from a rise in transaction fees, because that increases their overall payments. But for a lot of on the other side, especially people who have high volume of transactions and need those transactions verified quickly, an increase in the median or average transaction fee price actually affects them disproportionately, right? Because they want to make sure that their transactions are verified in time, so they're always paying something above average. And so I think
Sam, a high level overview. Let's give people an understanding of what a transaction fee swap is, just to give them a clear picture of what the product actually does and how it benefits both sides.
Sure. So what we look at is the average transaction fee over a period of time, on the blockchain. And so essentially, because it's on the blockchain, we have a clear oracle of what the transaction fees are on any given day. And so essentially, if you're, let's say, for example, a money remittance business, or you're an exchange, you want all of your transactions to get recorded onto the ledger as quickly as possible. And so you're typically willing to pay a premium transaction fee so that your transactions don't spend too long in the mempool and they get verified and on the ledger, and you can move on to the next transaction. So on the miner side, their exposure is, if transaction fees were to fall, their revenues fall.
Right.
So they're both of them are kind of exposed to the same issue. What we've done with a transaction fee swap is say, over the tenor of the contract, we look at the average transaction fee. We don't want to get distorted by one day spike, but because our clients are receiving Bitcoin every day as miners and are paying transaction fees every day. So What we look at is essentially say, let's say that we set the price at $6. If the transaction fee ended up averaging more than $6, then the miner would pay the difference between the $6 and the actual average over that period to the buyer of this contract, who would be an exchange, for example. So as a result, this exchange now has capped their cost, because if they ended up paying more in transaction fees, they're also getting an offsetting payout from the miner. The miner, on the other hand, has locked in a $6 transaction fee average, because if they receive more transaction fees, because the fee is higher than $6, they're paying it to the buyer of the contract. But now they've gotten a higher degree of predictability and reliability. And conversely, if transaction fees fell, then the buyer of this contract would have to pay them. So they end up being hedged.
Which is very important, right? In all of these new products that are becoming available. And, in that same vein, I wanted to ask you about, there was a lot of reports that came out prior to the halving that we would see minor capitulation if price was below $9,500 per Bitcoin, right? And price hung below $9,500 per Bitcoin for an extended period of time. And I mean, maybe I missed it. I mean, I pay pretty close attention to mining, I would say, like, every day, all day, but I didn't notice a minor capitulation. I didn't really see mass machines hitting the market. And actually, it was quite the opposite. I saw every machine that got released getting scooped up as fast as people could spend their money to get it. So why didn't we see that? Do you think it had anything to do with some of the, products like you're offering, products like some of the others are offering to help miners, stave off capitulation potentially?
I think that, the products that we're working on, hash contracts and, transaction fee swaps, difficulty swaps, as well as a lot of products other players are offering, do help. But ultimately what it comes down to is, what is the cost of mining for each individual miner? And as they start receiving newer equipment, whether it's an M30 or an S19, is it profitable to mine, at least on a cash basis? Because that's really what it comes down to. The capitulation comes either because the cost to mine a Bitcoin with whatever equipment you have and your power cost is more than the cost to buy that Bitcoin in the market, in which case, if you can shut down, you might shut down and just use the money to buy Bitcoin in the market if you want to be long Bitcoin. The question, though, is if you have a power agreement, a power purchase agreement, it means that you're guaranteed to pick up a certain amount of power. Then shutting off that mining equipment is not going to save you cash, or
Right.
not going to save you as much cash as you thought you might. So you might as well keep mining, because you're paying for that, that mining capacity, whether you use it or not. So I think there is some element of that. The other element is that if your cost of power is low enough and you have equipment that is profitable to mine at that cost of power, you keep going, hoping that some of the higher cost players in the space capitulate and you get a higher share of hash rate. Even those who may eventually have ended up capitulating, and I think there might have been a few, not all that many, but those that did would probably keep going, hoping that they aren't the first ones to cave, and enough other people cave that they can make it through.
That game theory aspect of mining, right?
Yes, exactly.
Who's gonna be the first to quit? It's funny you mentioned hash rate. I mean, obviously there was a drop after Black Thursday, but really this summer, not really. There wasn't anything noticeable. It's been kind of weird to watch it all, to be honest. And I mean, hey, look, everyone that stayed in the game played it well. Right now, all is good. Everyone's singing "Kumbaya" and making money. At least at this price, they should be.
Yep.
So it's very interesting. Do you guys see business demand differ depending on the price of Bitcoin, or is a hedging instrument a hedging instrument a hedging instrument? Like, does it matter what the price of Bitcoin is?
I think the price of Bitcoin definitely matters a lot. I think it's a few things. One, if you're talking to a miner whose cost of power is towards the lower end of the spectrum, they view themselves as inherently hedged against a falling price of Bitcoin, right? Because if the price of Bitcoin fell, their view is, and I think rightly, that a lot of higher priced miners might might exit, and their share would increase. So so the amount of Bitcoin that they're mining would increase over time, even if the value of individual Bitcoin fell, right? And so they should be okay on an aggregate basis. So I think there's some degree of viewing that as being inherently hedged. On the other hand, though, as the price of Bitcoin goes up, what that does to them is interesting, because now it actually enables a lot of even potentially higher priced miners to have enough surplus to go out and continue to scale their operations. And so, oddly enough, I think that the higher the price of Bitcoin goes, the lower their expected market share is going to be. And so that's where they might be more interested in hedging as well.
Wow.
So,
So I
in
guess
other
it's on
words,
both
yeah,
ends of the spectrum.
exactly. Because, when we think about things, products like our hash contract,
Mm-hmm.
the aim of the hash contract is to help miners lock in their revenue. And essentially, the buyer takes on both price and difficulty risk. Um, these two risks are related in the sense that as price goes up, the risk for the price risk to business operations falls, but the difficulty risk increases because everybody else is better able to both internally raise capital, generate capital to expand, as well as attract external funding. And so I think that that's where it really kicks in, because difficulty is one of those issues that are a little bit harder to hedge against than the price of Bitcoin. For the price of Bitcoin, there's a robust liquid market, with
Right.
both options, futures. You can, if you have an idea how much Bitcoin you'll be producing 3 months or 6 months from now, you could sell that in the futures market today.
Sure.
Right. But with difficulty, that's where the risk is that you end up with less Bitcoin than you thought you would.
So these contracts, right? You guys have been pioneers. Now there's definitely more market attention. I'd say we're nowhere near where it's going to be in the very near future. How do you feel about some of the competing products that are coming on? And I don't mean, like take shots at competitors directly, but when it comes to what's out there right now, how are some of the hash rate futures and the contracts that are out there? How do they compare?
I think what I have seen, and maybe I haven't seen every product that's out there. From what I have seen, though, most of the products that are hash rate derivatives are basically financially settled derivatives that are based on network hash rate. Whether it's what network hash rate is going to be on a given day in the future, or a 7-day average will be on that date, or the average between now and that date. That's different contracts are structured differently, but the goal is to use the total network hash rate at some future point in time as a proxy of what the impact would be on your own mining operations.
So another way of saying that is basically it's a synthetic contract as opposed to something that's physically delivered, right? There's not
Right.
there's not any actual hash rate backing up the contract that's going out.
Right. Exactly. Well, whereas the product that we're working on, what's different about it is you're actually buying the physical capacity of the miner that sold the contract, and you're receiving hash rate through a pool, and you're going to receive Bitcoin generated by that hash rate. You don't know for sure how much the Bitcoin is you're going to receive. What you do know is how much hash rate you're going to receive and for how long. So yeah, it is physically settled.
I think that this is, do you ever see this expanding out of Bitcoin markets into other markets? Like, and let me be more specific. Could this move from Bitcoin to HPC, edge computing, AI/ML?
Oh, absolutely. I think that's part of the vision. I think that's certainly something that we are very excited about, because, especially as you think about training AI and ML, rendering, things like that, those tend not to be mission critical. What it is highly compute intensive, but if there are some lags or delays, it doesn't matter as much, right? So the notion, I mean, clearly, if you want to train a robotic surgery procedure, you have the
Mm-hmm.
time to do it. Latency
Right.
doesn't matter. If you're then using that for a surgeon who's actually controlling a procedure remotely, that's a different story. That's when you want it to be incredibly fast response, as low latency as possible. But where it's less mission critical, I think that the market is definitely there. It's latent at this point just because it doesn't exist, but the demand is there, and I think it'll come.
Oh, it's coming. It's
Yep.
coming. We've had a lot of conversations about this over the past couple of weeks. It's been very interesting for us as a company. I mean, obviously we didn't name our company Hashrate by accident. But as we're out and we're having conversations and discussing our thesis, it's becoming more and more clear that the future is that Bitcoin is almost, especially these hash rate contracts, are almost a proof of concept for what's going to come. They're a way to price hash rate in a fashion that hasn't been done before, and it's great to see BitOoda leading the charge on this, because I mean, let's face it, there are a lot of other players out there, but there's no one that's really doing it the way that you guys are doing it, which is why I always enjoy having you on and talking with Adam, because you guys really are leading the charge. Corny though that may sound, it's true. I mean, you guys are, and it's been awesome to watch. What are some of the pitfalls and potential hurdles you think others that are trying to get into these markets may face?
I think, one of the things that sets us apart, I think, is that we have the deepest regulatory stack out there. We are regulated by the SEC and FINRA through our broker-dealer entity. We are regulated by the CFTC. We are a CTA and an introducing broker with the National Futures Association. We have our money, there are money transmitter or MSB. We are an MSB business registered with FinCEN. So I think that when we build out institutional grade contracts, I think that matters. Institutions care about who the counterparties are, who the brokers are, what regulations, what regulatory regime we fall under. And I think that really matters a lot. I think that we've certainly seen some contracts and some players that are certainly doing things that's, in size, but not necessarily with institutions as much, and certainly not more of the traditional financial institutions. And I think that's coming. We certainly see that, whether it's, Fidelity Digital Assets, for example, is a big player in, a big traditional player entering cryptocurrency, and they're certainly pioneers in the space, but they're not the only ones, right? And there are a number of other financial institutions that are very interested in and are building out products and services in crypto. And I think that it really helps to have that regulatory stack to be able to provide institutional grade solutions for them.
So what does this all look like in the next 5 years?
In the next 5 years, I think that I think that the institutional market is going to dwarf the retail market, quite the opposite of what it is today. And I think that that's going to drive a huge amount of liquidity in products like hash contracts, probably expanding from Bitcoin, as you mentioned, into more of sort of high performance general purpose compute, whether it's biostatistics or AI machine learning. I think the market is going to expand. I think Bitcoin cryptocurrencies are a huge part of it. I think that Bitcoin mining is probably one of the purest use cases of compute power right now, because that's all it is, right? It's, whoever chooses to buy a contract, sell a contract, whatever it is, you're doing the exact same thing. It's pure compute power. And I think that that's really powerful. I think that's setting the stage for expanding it out to so many other areas, where I think Bitcoin and cryptocurrency mining is the core of it. And that's going to stay on.
All right. Well, Sam, I think we're gonna wrap it up on that. That's a good note to end on. Thank you so much for coming on the show. It was awesome to have this chat. And do you guys have plans for another one of those reports? Can we expect one of those soon? That was fun to sink our teeth into.
There's going to be more material coming for sure.
Awesome.
Thanks for having me. This is a real pleasure.
Hey, we'll have to do it again. You guys keep the reports coming. We'll keep getting the podcast going. I'm excited for more of these talks. I get, it's a geeky thing for me to love to talk about derivatives and hash rate contracts. So I'm happy to have you on anytime, but thank you again, man. I appreciate it.
Thank you. No, I appreciate it. Anytime you want us on, just let us know. We're happy to be here.
There we go. Sounds good. And to all of the viewers out there of the Hashrate podcast and the listeners on Spotify and iTunes, thank you so much for tuning into the show. We'll talk to you guys all again very soon. Thanks for watching this episode of Hashrate Podcast, a Hashrate TV production. If you enjoyed this video, please consider liking, sharing, and subscribing for more great content like this every day of the week. In addition, feel free to leave a comment below and let us know who you'd like to see on the next episode of Hashrate Podcast. We'd love to hear from you. Also, if you head over to hashrate.com, you can sign up for our free weekly newsletter, Difficulty Adjustment. Every Wednesday morning, we provide you with the latest news and information on Bitcoin, cryptocurrency, and mining. Plus, each week, one newsletter subscriber will be selected at random to receive a free Ledger Nano S cryptocurrency wallet. So go ahead and sign up today. Who knows, you may be the next lucky winner. Want more from Hashrate? Follow Hashrate TV on Twitter. It's the easiest way to keep track of our newest content all in one place. That's at HASHR8_TV. Thanks again for watching, and we'll see you very soon. Please remember that all content appearing on this or any other Hashrate channel is strictly for informational and entertainment purposes only. You should not construe any such information as legal, tax, investment, financial, or other advice. Consult a licensed financial advisor before investing yours or anyone else's money.